video is going to be on wicks. Now, wicks are a pretty foundational part of how we do technical analysis, or at least a part of how we do technical analysis. I wouldn't necessarily call them foundational. And what I mean by wicks is specifically bigger wicks in the market. So you see things like this, it's a relatively big wick compared to everything else. Things like this, a relatively big wick compared to everything else. Things like this, a relatively big wick compared to everything else. Things like this. So we're going to get a little bit more nuanced in this video, and we're going to be using this little bit of technical analysis that I went through and made, right? These are all rectangles. This isn't a piece from a chart. This is something I made for demonstration purposes that should showcase every single use case of wicks in the market. So again, the very first thing, I guess not again, but the very first thing that we have to talk about when we talk about these wicks is what they stand for and kind of what they are. So they're basically the same thing as fair value gaps. And in fact, you treat them identically to fair value gaps. So whenever you have any wick, so right now we're talking about any wick in the marketplace. Okay, any wick in the marketplace is the same as a fair value gap. Now, this might be slightly confusing to you because you don't see me looking at every single wick in the marketplace. And that's because if you looked at every single wick, you would have about 5,000 levels on your chart, and it would be completely useless to you. So there would be no universe where we sit down and we look at every single wick of every single candle. So there has to be a few criteria in place that that kind of dictate what we're looking at, what we're not. It's not like a fair value gap where they're kind of rare. Wicks are in every single candle, right? So we can't just look at every single one, and that's the very first important part of this. We have to come with a set of criteria. So I'm going to lay out a set of criteria. Now, the criteria that I use when I look at wicks is really simple. I have two things that I'm looking for. They're big relative to the surrounding price action, relative to the surrounding wicks in price action, not candle bodies, and they're either created from a high time frame level, from a test of a high time frame level. So you could imagine, for example, like this middle wick. In this case, you traded down into it, or you traded down into it here. Anyways, you push through it, you close the candle body above, you create this relatively big wick from the test of a high time frame level, and the wick is relatively big compared to the wicks around it. This would classify as one that I would look at, versus something like this candle right here. This isn't created, well, in this particular case, we don't have everything, but in theory, if there was no high time frame level here, this isn't created by a high time frame level. And even if it was created from a high time frame level, this wick is not relatively big to the surrounding candles. Okay, so these are the two kind of main filters that I use, and I really only look at wicks that meet these two requirements. Again, they have to be big relative to the surrounding candles, and they have to be created from a high time frame level or something of importance. I'll talk about that of something importance soon in this video, so you'll see what I mean by that. So if that confuses you right now, don't worry. Okay, so if those two criteria are true, then we can treat a wick just the same as we treat a fair value gap. Okay, so going into this video, we're going to walk through this whole section of price action that I created, and we're going to not talk about how to enter them and where your stop loss placement is going to be and stuff like that. I'm noticing that I'm missing a wick on this candle, so I'm very I'm very particular when it comes to this stuff, which is also another video that I want to make. Is if you could create and kind of draw very good looking price action, you probably understand it. So we're going to go through this whole section of price action here, and we're going to work on identifying them. We're going to talk about some intricacies in this price action. I've built in some edge cases and some topics that I want to talk about pertaining to wicks, and I'm also going to have, probably the next video after this, a entries video all about wicks and how we enter them and things like that. But we have to get through the technical analysis part first. So just going through this video as well, just keep this in mind, right? These are the requirements for me to even consider a wick. But also keep in mind that every wick is technically treated this way. Every single wick in the market is treated as a fair value gap. This is like a huge revelation to some, but again, understand the reason why we don't use every single wick. Because if we did, it would be mayhem, right? There would be about 50 quadrillion fucking wicks everywhere at all times, and not all of them hold, and you would have very bad results, and there's no filtering, and it would just be terrible. Okay, it would just be absolutely terrible. So let's start walking through this price action. So let's say, imagine price was pushing up, you fell down, and boom. So price comes up, you fall down. At this particular moment, let's say you had a bullish bias, okay, and you just traded into a high time frame level. Now this could be a daily, this could be anything. Basically the highest time frame that you have access to. You all know what I mean when I say high time frame level. At this point, when this candle closes, not before it closes, notice how this candle's wick, the bottom wick of it, is substantially bigger than any other wick in surrounding price action, and it trades into a high time frame level. So that meets all the requirements for us to treat this wick like it's a fair value gap. Okay, and we'll go back to this one in a second. But let's say now that meets all the requirements, we can treat this wick like a fair value. So what exactly does that mean? Let me make this green. The colors don't matter, by the way. So let's imagine, sorry, I'm weird with stuff needing to be right. Let's imagine, okay, so this meets the requirements that we talked about. It's bigger than the surrounding candles, and it trades into a high time frame level. We can now treat this as a fair value gap. So what that means is you all of a sudden have all the levels just like you would in a real fair value gap. That means you have all three levels in it, right? We've talked about this with fair value gaps. Same thing with wicks. You have the 75%, you have the 50%, and we have the 25% level. All of these get created. Very often, with wicks in particular, you could almost void this higher part, but they're all here. And also just the entry to the wick as well is also a point that you could look at, right? A lot of people look at these wicks and they say, oh, it's only the midpoint. No, the fuck it's not. It's the entire wick, because we treat the entire wick just as if it was a fair value gap. Okay, so in this particular example of price action, you see price comes down into the midpoint, and then on this candle, we return right to the high end of this wick, and we continue off. Now, I said I would come back to this piece of price action, and that's because imagine you have something that looks like this. Right? Let's imagine you have your high time frame level here. We're actually going to leave this on the chart for later as well. Well, let's say you have your high time frame level. This is probably a little bit more accurate. Let's say you have your high time frame level here. Okay? In a case like this, you do have a big wick on top, but price is likely, especially if you close back underneath your high time frame level here, you're very likely to not reach the midpoint because you have your high time frame level. So this is something we'll talk about more in the entries video, but just as a kind of a precursor, if you were considering, for example, shorting the midpoint of this wick, because this meets all the criteria, right? It's bigger than surrounding candles. The wick is bigger than surrounding candles. It trades into a high time frame level. Potentially it's coming off of a liquidity sweep, which is also another quote unquote requirement or a confluence that could add a lot of probability to these wicks that you play. But if you close back underneath a high time frame level, very likely you'll just retest that high time frame level if the wick went all the way through it instead of going to the midpoint. Sometimes it will go to the midpoint, but if you're thinking about entering off of something like this, I'd rather just take the high time frame level to kind of ensure that I'm actually in the trade, if that makes sense. All right, so let's remove this just for sake of demonstration. We have everything that happened down here. This wick held. We pushed up, and then the same thing happened, right? We have this push. This is a giant wick, right? And this wick is substantially bigger than anything in surrounding price action, right? That makes sense. And now what you'll notice with this one is we did not trade into a high time frame level. So you could kind of classify wicks into two categories. In the second category, does not need the high time frame level. So you have one category, which is when you're at the bottom of moves, and then you kind of have another category of wicks, which I would classify as like the quote-unquote breakout wicks, if you will, where you've already created kind of a bottom. You think direction's up in this particular example. You've created a low, and this quote-unquote breakout wick is some sort of high that you create internally that you break into a new high. And this wick can be used without a high time frame level. This one I would recommend using a high time frame level like as a requirement, but something like this where it's more of a breakout, like price trades up out of the range and you're just looking to continue a direction, you could use this without a high time frame level, and the only requirement is that it's a big wick, right? So you take this, notice how you close above the wick, right? They don't get activated. It's just like a fair value gap, right? So if you're treating this as a fair value gap, imagine you were treating this as a bearish fair value gap at this point. It doesn't turn inversion. It doesn't turn inversion until you close over it. Okay, so really take that fair value gap thing to heart. When I say treat it as a fair value gap, I mean treat it as a fair value gap. So just like this would be a bullish fair value gap, now that you're getting over this, in the moment this would be bearish, right? But the second you close over it, this quote-unquote wick or fair value gap, don't call these fair value gaps. They're not fair value gaps, they're wicks, but we treat them like fair value gaps in the same way. The second you close over the high of this can be used as a quote-unquote inversion fair value gap or an inversion wick, right? So you close over top of it, and then price comes back down into the midpoint, okay, before it takes off. And oftentimes you'll see me take entries like this a lot. Like if I fail to get in here or I want a little bit more confirmation, you'll see me take entries like this a lot. When we get into the entries video, you'll see how I place my stops and shit like that for positions like this, right? So this is one example, right? And in this example, we talked about the low, right? And how we could use this with the high time frame level. This is at the low of a move. This is more like the breakout part of a move where you're expecting an aggressive continuation or an aggressive run. And that's how you could use inversion gaps or inversion wicks to kind of help on breakouts, if that makes sense. So price continues. Price falls, falls down. We create this fair value gap, and then we create this wick here. So this is an important part of this video because this is kind of an edge case that needs to be talked about because it's important, right? Notice how you have this fair value gap. So it should be going without saying. You need to know what fair value gaps are if you want to use this video effectively. Notice how we had this fair value gap right off the rip. And then notice how this wick pushes all the way through the fair value gap and then closes underneath the fair value gap, right? This candle's wick does. At the moment that this happens, if this be a bullish fair value gap or in this case a bearish one, this wick here is going to take over the role of this fair value gap. Okay, so what does that mean is you drag this aside, oh my gosh, it turned inversion, right? It closed outside the high end of it, and then it just stops. Why? Because you never actually closed above this wick, right? And that's what I'm saying, where if you have a configuration of candles like this, where the wick completely encapsulates the fair value gap, you can more or less change that fair value gap to the wick. And now you're using the wick instead of the fair value gap, okay? Hopefully that makes sense. So price tries to push, it can't close that wick, so what does that mean? It's probably going to go test the lows. It tests the lows. Now let's imagine, again, just for sake, let's imagine there's some sort of, I don't know, high time frame level down here or something, right? If you're still bullish, this becomes a fine setup where you have a liquidity sweep, you have a high time frame level, some form of internal confirmation. In this case, you don't close this fair value gap, you create a big wick. Something like the midpoint of this wick would be valid. And this wick to look at as a fair value gap would also be valid, like a bullish fair value gap. Okay. And by the way, sometimes you're going to notice that the market's using fair value gaps way more, and sometimes you're going to notice that the market's using wicks way more. So both of these things are useful, but every once in a while you'll notice how the market's using one or the other more often than the other one. So then price pushes, and remember we still have this wick here, which is in this case the fair value gap, because exactly what we talked about back here, right? So in this particular example, the second we close above this, what can this be used as? Inversion. And you see how price, we close above the wick here, we close above it, we trade back down into the midpoint, and price rallies. Okay. So this has talked about a lot so far. We're going to talk about more, don't worry, but this has talked about a lot so far, right? Some examples when you replace fair value gaps with wicks, some examples of what you're actually looking for in wicks and inside of big wicks, etc. And one more thought here, by the way, is if you're at all-time highs or all-time lows, let's imagine this was a push into all-time highs and you don't have a high time frame level up here. Well, in this particular case, because you don't have a high time frame level up here, you can just use all the levels in this wick. Like if this was all-time highs, you could just still use the levels in this wick. And by the way, you don't necessarily need a high time frame level to use the levels in a wick, right? So what do I mean by this? Let's say you don't have a high time frame level up here, and you create something that looks like this, right? Let's say you don't have a high time frame level for this lower wick, like you have nothing right here that tested into this. You could still use the levels in this wick on a lower time frame to kind of watch price, see if you could degrade through that. Like this wick is still there, right? These requirements and these things that I'm kind of giving to you, saying it needs to test in a high time frame level, it needs to do this, doesn't mean that everything else doesn't exist. They still exist. It just means it's less probable to hold. But something being unprobable to hold is sometimes just as useful, because you could sit there and you could watch the degradation of that level on a lower time frame. So if that doesn't make any sense to you, what I just said, it will one day. It will one day as you get better and your intuition gets better and you can start to see these things a lot clearer. But what I just said is very powerful. If you get it, you get it. If you don't, you don't. Right? I can't explain it any better. So cool. You trade in this fair value gap. You replace this fair value gap with this wick. Trade down in the midpoint of this wick. Let's imagine. Okay, I know we're doing a lot of imagining, but let's imagine we have this high time frame level here. Okay, and we just tested into this high time frame level. You see it, right? We broke above it. We broke above this whole candle. We traded into the wick down here, the midpoint of the wick. We got above the high time frame level again. We traded down into the high time frame level. Now, if you look to the left here, we have this candle's wick. This candle's wick is bigger than previous wicks, but it does not trade into a high time frame level. But this candle's wick is very similar to this one, where it's more of a breakout wick. Okay, and we could draw this way, and the second price trades above it, we can make an assumption where if price holds inside of this wick, then we don't need to revisit the high time frame level. And in fact, my last two trades were based off of this. Depending on when you're watching this video, that means nothing, because my last two trades in a year are not going to be based off of this. But my last two trades as of 6/23/2024 were based off of this. So you break above this, we hold inside. So holding inside of this and holding inside this quote-unquote breakout wick is almost representative of you not needing to go retest the high time frame level down here. Hopefully that makes sense. Cool. We push up. Let's imagine this was all-time highs. ATH, right? Well, that means we could use this wick just as is because it's bigger than previous candles and we don't have any high time frame levels to use. I wouldn't short something at all-time highs, but if it holds, it could give you some information. But yeah, I would never short at all-time highs. At least not right at all-time highs or anything like that. And now we get into this bit of price action where you have this giant wick up here that gets created and we don't trade into it. And then what happens? Well, we break below this low. Okay, so now this wick that was used to hold us up before, well, it just turned inversion, right? Just like we just spoke about, it just turned inversion, right? So let's imagine you have something like this, and this wick just turned inversion now, okay? Because you closed it. So on this candle, you closed it, this turns inversion just like a fair value gap would. This now turns into a quote unquote inversion wick, right? So any push back up into it, push into it, push into it, and the high time frame level in this case, but even if you didn't have the high time frame level, push into it, these can be used as quote unquote that inversion wick. And this is going to be the most aggressive way for price to hold, right? Especially like if you're in a move like this and you only come back up into the low and get rejected off that low, that could almost help you to anticipate very aggressive price action going forward. Versus if you were to pull up into the higher bits of the range up here, well, you're probably not going to have as much of aggressive price action running down. Now you might, of course, you don't know what the market's going to do, but really rejecting off the first test of this range, and oftentimes it's going to be a big wick like this, can indicate potential like a lot more aggression coming through. And this could be extremely quick, right? Like you might see something like this where this closes here from like one tick and it trades up just a little bit into the like that wick, and then it just dies off. And it never comes back up into that, right? It doesn't need to sit there for a while. This could just go, right off of the immediate test of that. So this kind of goes over pretty much everything to do with wicks. Like I said, there will be an entries video that goes over how to enter wicks and where stop loss placements are, because it's a little bit different than fair value gaps. But this is how I look at wicks. This is most of the cases. If I missed one, ask a question about it. I think I covered everything. I kind of crafted this price action to try to cover every single case and every single scenario. From when to use high time frame levels and when to not, when it takes over fair value gaps, these kind of more breakout wicks, and if we're at all-time highs, etc. Just basic types of wicks that go into high time frame levels that you could use, how to filter them out so that you're not looking at every single wick on the chart. I think I went over most things that should be helpful. If I missed the scenario that you're thinking of, go ahead and ask me about it. But this is Wicks.